You are listening to chartingwealth.com for Tuesday, the 22nd of March, 2016. We always start with IYY, which represents the total market. We have the market continuing to go up nice and clean. The market just continues to do what we expect it and want it to do based upon our large and short charts. I know a lot of you are very happy with what you've been seeing on the charts and the accuracy. I am very happy with that too, but I will tell you that just about the time you think you know everything about the market, it surprises you. That is one reason that we always practice, even when you know enough and you start using real money in the markets. I tell people all the time you should be doing practice trades and investments twice as much as you're doing actual ones. Why? So you learn and you continue learning, because the market does change. It changes all the time. In fact, it does that even more so nowadays with all the computer programs, with all the quant trading, with all the things that are going on, changing the market. That's why you have to pay attention and continue to learn. That's what's so fascinating about learning how the market works and how to read a stock chart. And as I say over and over to my friends who love to look at the finances of companies and find out which companies are undervalued and all, that is absolutely wonderful. Don't just know that, okay? Add to that, if you're that kind of investor, add to that the ability to read the charts. Now, here's what's going on. We have, oh my word, the market turned over going up back on the 16th of February and has been running up pretty much ever since that. One bit of a down two-day candle on the 19th. We always start with the total market looking at our two-day chart. We have a nice two-day trend line. The market continues to go up. It's up 0.12% for the day. If we look at the 4-hour chart, what do we see going on? Well, we see the market could be leveling out. Now, it's not crossed over going down yet, but for those of you who jumped in and saw the market run up and made some profits in your virtual trading account, because again, we're not a stock calling service, just be cognizant of what's going on. The market is still in a strong uptrend on the two-day chart. The 4-hour chart looks like it could be rolling over, so just be aware. The short chart can roll over and pull the big chart down. It'd have to be a huge drop, so continue to watch. If you've made some money, you might sell part of that position and keep some of it. I know folks who will sell half their position when they've made a nice profit and let the rest of it ride, depending on how, if they're ambivalent about where the market's going, but continue to watch. Now, let's go from the 4-hour chart on the total market to the two-day chart on the S&P 500. It was up 0.14%, so just a little bit more in the total market. Again, nice, strong, well-connected two-day trend line. Derivative oscillator is losing some of its energy, but still up. The 4-hour, I don't know where I got 4-hour from yet. The MACD, moving average convergence divergence, is still well above the signal line. We're continuing just to see nice, strong up movement. Now, let's see what the short chart tells us about how strong that movement is. Look at that. Again, we see banging its head up around 204.53 or so for 2.5 days now. We have had a crossover going down on the short chart, so those of you who are in an S&P 500 and SPY trade, just be careful about where things are. Watch, we do have a short-term crossover going down. Derivative oscillator is still strong. It's not crossed over yet. So just be cognizant of what exactly is happening. It could just be some reverberations. Again, as long as your derivative oscillator is in the positive, that gives you a little bit of comfort. But just pay attention to what's happening, because it has been banging its head. It could just be digesting, getting ready to soar up. In fact, the market had virtually its move up today. It had no down move on our Heikin Ashi type of candlesticks, but good bit of up movement that was pulled down by the bears, but the bulls were able to keep the market up. So continue to pay attention to that. We do have this day starting off with some indecision, so let's just see which way the market continues to go. Be cognizant of what's happening on the short-term chart. Now let's look at the Qs. QQQ, that's up 0.39%, so about twice, a little more than twice, what the total market in the S&P 500 was up. We have, again, above the 2-day trend line, derivative oscillators in the positive, still losing some energy. The MACD is above the signal line. If we look at the short chart, let's see what we're seeing there. Again, this is what happened now. We were just talking about what's going on in the S&P and the total market banging their heads. Well, the Qs was doing that and then took off and rose above it. So if we look, though, we can see derivative oscillators giving us some real questions. Is it going to continue to penetrate through going down, or is it going to move back up as far as the MACD and the signal line goes? Derivative oscillator is pretty much hanging steady, again, losing some energy. So pay attention to those things. Continue to watch. Those of you who jumped in when we talked about that movement taking place back on the 14th should be very, very happy at this point. The low that day, 105.69, the high 106.75, and where are we? We had a high over the course of the day at 107.89. Not bad for, what is that, 3.5, 4 days in the market. So continue to watch. Just be cognizant of what's going on. That's what it's all about. Practice, learn. Make sure you understand all these particulars of the market. Don't just go charging in. Remember, just because the tide comes in and floats all boats doesn't mean you're a genius. You've got to make sure that the moves you make are the moves that make the difference, that you're being smart about what you're doing. I know people all the time jump into the stock market when everything's going up, think they're geniuses because they made money. Well, it's making money when the market's going up and down and being able to read a chart. Now let's talk about gold. Confirmed down move on gold on the 2-day chart back on the 15th of March. Gold soared down over that 2-day candle and had some up movement on the 17th, and then that candle on the 21st that closed out then is what we call a doji. It is a little bit positive in the doji status, but still in the negative. Doji means lots of indecision, so let's just continue to watch. Let's see what the 4-hour half-day chart can tell us happened during the day. Showed us a lot of strong down movement throughout the course of the day. The 2-day trend line broke over going down. Those of you who were watching that in the morning knew that that was a telltale for you to jump in. And it continued to show that in the afternoon. Gold down 0.70. You might say, wait a minute, what's he talking about jumping in? We're talking about jumping in during the morning hours into a down trade on gold. Now, how is that? Well, there's inverse gold funds that you can purchase in your virtual trading account. You can buy those, and they actually go up when gold goes down. If you wanted to play any kind of options, of course, it would be a put option on gold, whether it's GLD or another ETF. But again, those put more at risk than actually buying the inverse fund. And a lot of times, depending on where you are buying the inverse fund and what you are who you're actually trading with, they may have an inverse fund that you can enter into for free. Isn't that curious and interesting? So what are we talking about? Are we talking about real trades? No, again, just to reemphasize, we are not a stock calling service. We're an education firm. We want you to learn, practice, learn with us, and then once you are comfortable with your skill set, you make your own decisions. In the meantime, you become a virtual millionaire by going to any of those online brokerage accounts, opening up an account, put yourself $1 million virtual dollars in, then see how good you are and how good you can get. That is where we end the day on Monday as we go into Tuesday, the 22nd of March. We thank you so much for joining us. We love to hear from you. You want to help us out and show your appreciation for what we do, go to iTunes, subscribe to our podcast, give us a 5-star rating, say something nice about us. Also, you can subscribe on YouTube to our channel. You can also follow us on Facebook, Twitter, Instagram, and you can go to our website, best of all, and sign up for our newsletter and receive these video and or audio podcasts every day. Thank you so much from chartingwealth.com.